Well, those global developments are also being closely watched by our market monitor guest tonight. Barbara Marcin is portfolio manager of the Gabelli Funds. So, Barbara, how concerned should investors be about this whole Ukraine situation? And what if there are new sanctions? How significant would that be?
I think it could be significant. You know, I'm surprised that we haven't seen more of a reaction. We have seen a little bit of stock market reaction, and of course the Russian stock market and the ruble have reacted, but really in things that usually price in risk around the world, such as, you know, higher yielding bonds or riskier assets. Sometimes you see the reaction in oil. We haven't really seen much reaction so far, and so I would say that's ahead of us, and I think it could be
gold up a little bit today.
Gold up a little bit.
Bonds, the yields came down, which indicates a sort of flight from risk.
A little bit could
and
be.
So forth. Taking that one off the table for now, earnings this quarter have been roughly flat,
yes,
up a little bit. There's an awful lot riding on better earnings in the current quarter and going forward, isn't there?
I would agree. You know, we had the last couple of years, certainly last year, earnings were up 5% year over year, and also the year before. So 2012-13, only 5% growth in earnings. So last year, all of the market appreciation came from multiple expansion.
It was speculative.
Right, and we can't really expect to get that this year. So we've been hoping for a stronger earnings period, and it really doesn't look like we're going to get it. If this year follows through on the first quarter, we're again going to see an approximately 5%
Does that make stock prices vulnerable in your view?
It does. It does. The market multiple going forward is about 15.2 times earnings, and that's a mediocre value if you're at full earnings. So we've been hoping that we would see an economic acceleration in the second half of this year, but I'm not sure. We've seen some broad-based housing momentum falling off. So.
Right. A lot of issues, the earnings, the economy, and global developments, but you still have a couple of stocks that you like, and I'm sure our viewers want to hear all about them. Halliburton is at the top of your list, and here's a stock that's actually done very well so far this year. Is it worth it to put fresh money into Halliburton?
Well, and I think there's a lot more to go. And Halliburton is a company that has strong growth in cash and earnings ahead of it over the next few years and is selling at a cheap valuation, which is, of course, what we want to invest in. Halliburton is a leader in pressure pumping, which is used in hydraulic fracturing, so it has very solid demand for its services over the next 3 or 4 years. And it's selling about, I think it closed today about $62 a share.
You're absolutely right.
And I think this year it's going to earn about $4 a share, but within the next few years that can be $6.57. If we put a 13 or 14 multiple on it, we can have an $85, $90 stock. So I think there's strong growth ahead of this company.
You like their stuff, you like their stock, Apple. Tell me this, though, Barbara. Should I want you to give me the case for Apple, but also tell me, should I buy it now ahead of the split? Or do I wait? Does it matter?
I would buy it right now. You know, yesterday's action, I think, showed how much pessimism there was. The stock was up 8% on 2.5 times the normal trading volume. And so I think you're seeing a reset. And then today, in a negative day, it held on to all of that and still closed up a little bit. So I would buy it now.
4%?
Yep, 4%. Very cheap stock.
Do you have a target price on Apple?
I think that once we get, it's selling about 12 times earnings, 9 times without the cash. So I think we're going to see an increased multiple when we get the big new product coming. And I think we'll see the old highs, which is over $700.
700. Okay.
Yes.
Real quickly, AIG, you like AIG, and this is a stock that's been flat for the year, around $50 range. Why do you like it?
Yes, again, a very inexpensive stock, which I think can grow earnings dramatically over the next few years. Management is very motivated, very sophisticated company with some good growth drivers ahead. Company is selling about 75% of book value right now. That's book value is about $68 as of the end of the year. If that goes to about $80 in the next 2 or 3 years, we get a 1.2 multiple. I think you can have a $100 stock.
Disclosures? I assume you own all of these?
Yes, I own all 3 of these through my fund, which I own.
Okay, terrific. Thank you so much for coming by. Great having you on the program.
Great to be here.
Have a great weekend.
Thank you.
Barbara Marcin, portfolio manager with Gabelli Funds.